Welcome to TradeTheMBI.com. This is Jonas Reports for the 4th of January. Well, it looks like some traders have actually had to return back to work. Nice cap up and then just pretty much sell off, though it came off the bottom of it and pretty much doing what we expected here with straight across. It's the continuation from that DOC orange, and now that slight pop up. It's going to make it hard for any plus side move at this particular stage now with that. Still, you have your bullish tint with the magenta, but you don't have any real orange dip. Now that can happen certainly during the day, but just makes it tougher from an initial setting. So I think you're going to get a little bit more of the same, but you can see that there's a lot of pressure building because that's a pretty big range day for not a whole lot of difference. And that's some of that reallocation in that for the new year. From a NASDAQ standpoint, you can see hit that 23%, rejected completely off of it. Identical readings from a DOC standpoint, and now much softer from the MBI. So where the NASDAQ could have led things, looks like it's being problematic. And I think we saw that with Apple, Tesla down very, very large, and Apple was still significant, suggesting that they're cutting back. Now, that becomes the question, are they cutting back because they see the potential of significant slowdown and want to get ahead of it, or are they just in panic mode? Probably not so much panic mode. Apple, you definitely knows where trends are heading, but then again, they had some poor success with their latest release. Saturation, who knows, but I don't really think it's necessarily a bellwether. What we will be watching was, and then there was the missing leading headline of the construction spending doing great. Well, we talked about this. A reading like that is going to be influenced by the fact you're paying significantly more for everything that you're buying. So it looks like you're spending a lot more. Obviously, building permits and things like that tend to be more relevant. And some of that data is still yet to come. Treasuries took a big bounce on the expectation. Again, we're back in the Fed isn't going to raise rates. Everything stopped. So we're going to have to, cut rates immediately. It just isn't going to happen that fast. I know it's wishful thinking. I mean, now that's barring some kind of catastrophic ending event like we had with the Lehman situation, but they seem to cover quite a bit of that now. I mean, they're not afraid to use the liquidity of their position at the Fed to flood the market with resources. That there's gridlock in Congress, that'll be an interesting one. You have no speaker yet. Could have a significant impact in actually making things better, at least from it's not a political thing, but at least without spending as much. You certainly will have a paralyzation on deficit and much harder to increase that. And ironically, that would actually be benefit to the economy, less of a drain. Oil, significant slide back into the mid 75s. I mean, that was a pretty large outsized move. Hit the crossover of the magenta, but every little bit of that fading is definitely going to be a help, keeping things softer. And as expected, gold is not buying it because it can clearly see that rates are going to continue to rise. And even if the Fed decided to do, I mean, particularly if the Fed decided to do any easing, that would certainly be catastrophic for inflation. It would be blown out at that particular stage. So it just doesn't make a whole lot of sense. Gold doesn't look to stop anytime soon. I mean, it doesn't happen often, but that cyan under red, which is always a buy, took place back a little bit. We had the first setup of it right back here when we first turned green, and that's pretty strong separation between green cyan and shakeout. Not bad in the upper 20s there. And the euro uh, taking a little bit of a fade as people recognize that Eurozone is still quite problematic, but it should still continue to hold on. I mean, it's a pretty strong reading. Sometimes you can have an outlier day or two. Not surprised Bitcoin even made a nice little bounce move. Plenty of positive readings from there. We didn't get the orange dip below, which is probably going to fade at some particular point off this pump. But it had been consolidating for quite some time. Obviously, you're starting to get resolution with SPF and some of these other things, but it doesn't change the ultimate question of stability. The EU is coming after Bitcoin for its energy consumption. ETH made a similar move, and I think just some of the market situations, of course, lovely with the TS waiting for data, but the real question is going to become, if the EU bans Bitcoin, and that you're going to end up with more of the same situation where it becomes more of an isolated group that can invest in, and that makes it hard if it's not transitioning into a mainstream situation. So that's the long and the short of it for now. We're up tiny amount, a little bit of recovery from within that. But the fact that it held up end of day and came back was a bit of a positive. I think with the MBI readings that we're seeing, we're likely to hold on to a continuation of what this is sideways action. As always, though, trade well. Have a good one.